Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at exactly what the charts are telling us in terms of how far this bull market will run based on the facts of the charts from the previous three cycles. I'll also have a look at the wider markets to give us some input as to what's happening in the background and how Bitcoin fits in, as well as look at the ETFs and the demand for it. Is it still continuing and what we can expect going forward? I'll also have a look at the 60-day cycle to make sense of exactly what's happening with the current price and over the next few weeks. So if that sounds interesting, then you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So the main question on everybody's lips at the moment is how far can we go in this bull market and how long will it take? While nobody can really predict in terms of the price action the Bitcoin price will go, what we can do is have a look at some of the timelines of what's happened in the past to ascertain and extrapolate what can happen in the future. And I'm going to start off with the first cycle down here. The private members will have to be a little patient here because this section I actually covered in yesterday's Bitcoin miners video that I do for the private members on the Wednesday and the Friday. So here is what the charts are saying in terms of how far we have to go in terms of the timeline. So this is the candle here, which actually came and broke the previous all-time high. And we can measure from this point onwards, and this is the monthly chart, that after breaking the all-time high, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. So we had 9 months to the end of the bull market before we started the bear market here. So remember that, 9 months. And if we move to the second cycle, so this red indecision candle was the one that protruded above the previous all-time high at this point. And after this, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles to the top of the market before the bear market. So that's 11 months here. And in the last cycle, this was the candle that protruded above the previous all-time high. And if we take it to the actual high of 69,000, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 more candles to the top of the market before the bear market. So once again, we had another 11 months here. So based on the previous 3 cycles, whenever we break the previous all-time high, the number of months it takes to get to the top of the bull market has actually varied between 9 months and 11 months. So we can safely say that based on that, if that was to be recorded one more time, we've just broken with this candle here, the March candle, it went above the 69,000. So 9 months from here would take us to December 2024 this year. And 11 months would take us to February 2025. So based on this particular chart, what we can say is that we can expect this bull market to run between December this year and February next year. And only time will tell where it is, but it's a very important measure to have in your mind, and it prevents you from making bad decisions along the way when you have some sort of an idea of where it may well top out. A quick look at the wider markets and some interesting developments on the SPX. On Monday when we did this video, we were going higher at this point. But as you can see with this gravestone doji candle, this is a rejection of higher prices. So what that's telling us is that we may well have topped out in this 60-day cycle at this point here. So what we can expect is a period of consolidation, which would be very bullish for the start of the next cycle. Or if we're going to have a bigger correction into the 60-day cycle here, I'd be looking at this particular neckline around 5,030. So this candle here, the gravestone doji candle with a long wick at the top, is a signal that we've topped out in this cycle. And the information to elicit from here is that it's unlikely, not impossible, that it's unlikely to get above this particular high. If it does do that, that would be incredibly bullish, because that may well mean that this is the start of the new cycle with this candle. And if you measure that candle from the previous low here, that means we would have started an early cycle at day 40, and that's telling us this market is much more bullish than you would expect by compressing these cycles even tighter from the 60-day point. The Russell 2000, as we mentioned before, we've broken out from the actual neckline here, and we're just consolidating just above that neckline. So we've come back several times, had a fake below it, but now finding support on that line. So this looks like it wants to move much higher. Moving on to gold, what we can see is that we had this big cup and handle pattern with this yellow lines here. And this is an incredibly bullish pattern in classical charting. And as I mentioned in the Monday's video, that there is now a high probability of breaking out on this neckline that we've created all along this cup and handle pattern. And if we zoom in, I mentioned on Monday when we recaptured this particular trend line here, because for all intents and purposes, when you lose this support line, then you would expect for it to retest that line and come back and fall down. But what happened was we recaptured that support. What that told us, there's a strong rising demand for gold, and that this candle here was a signal that we're more likely to break up from this neckline. And that's exactly what we are doing at this point now. And what we can expect is go much higher from this point onwards. So you may find that we break above this and then come back and retest that line as support and then move to much higher levels. So gold looking incredibly bullish. And with the dollar, we have a continuation of the slide to the downside. And we're expecting it to come back down to these levels here, around about 100, and even to 99, 98 down here. And that's obviously very good for the wider markets. Getting closer to Bitcoin, what's exactly happening with the ETFs? And as we can see, BlackRock leads the Bitcoin ETFs with record inflows. And if we have a look at exactly what that means, if people think we're going to go into a bear market or we're going to have a very big correction, need to see this as evidence to the contrary. So what the article is saying is that the BlackRock's ETF had $788 million inflows on March the 5th. That's one day. And this set a new daily record by buying 12,000 more Bitcoins. So just imagine that the Bitcoin miners are producing 900 and just one ETF is buying up 12,000 on this one day. There is an incredible amount of supply crunch that's developing within this market, which can only mean one thing and one direction for the Bitcoin price. And if we have a look at the asset inflows and outflows, we can see that that 12,000 for BlackRock easily surpassed the amount of Bitcoins being lost by Grayscale. And on top of that, we have Fidelity, which added another 2,000. And we had the other ETFs adding these amounts. So you can see quite clearly that we are getting a huge amount of inflows, far in excess of the outflows in the ETF space. And what the ETFs have done have taken Bitcoin above the previous all-time high, but much quicker. And this would have happened without the ETFs, but it would have happened, but much later. Many people out there thinking that we've topped out as a triple top of the 69,000 and the 64,000. Just want to remind everybody that the current Maya multiple is 1.75. All the previous three cycles, i.e. the three tops of the previous bull markets, have all been above 2.4. So there is still quite a lot of room to go, and that would fit in with the narrative that we're going to probably top out between 9 and 11 or 12 months. And just to confirm that the Bitcoin bull market's parabolic phase is now just starting. We have Bitcoin now coming in the main media where everybody's talking about Bitcoin simply because it's hit its previous all-time high. And we can see with the BBC News and everywhere else in all the news channels, Bitcoin is now raising the awareness of the retailers. They're all now waking up. So this is where all the action starts, when the retailers start to enter the market, where every man and his dog will be collecting the pennies to put into Bitcoin. And if you want to know where we are exactly in this Wall Street psychology of the market cycle, if you've been watching my videos over the last year or so, you'll know that I was mentioning that we are now in this situation here. While everybody was still in this disbelief phase and expecting the market to go much further, the market had already turned and it was moving to the upside. And people have not even realized that we've passed the optimism stage. We are moving actually from belief, i.e. time to get fully invested. This is where the retailers enter the market for this blow off top for the next 6 to 12 months. So now a lot of geniuses will be created in this market. And the danger is when it tops out and people may have to ride it all the way down here. So the skill now between where we are to where we get to is finding the top, looking at the exit indicators and focusing our attention on how to best get out at the near top as possible. One thing I can tell you is that nobody will get the exact top, just like nobody will get the exact bottom. And we're now really in the critical and most difficult part of this bull market. So what we're really expecting now is for retail, when they enter here, they will provide this fuel to get to the top of this bull market, just like as it did previously. And we're going to have that same rise up here. How far that will be, nobody really knows, and I went through the possible scenarios in the Monday's video. One word of caution, along this journey here, we will still have our 20% corrections, if not more, just as we did here, and here, and here, and here. These are designed by the market to shake the weak hands out of the system. And the question you have to ask yourself is, are you going to be the weak hands? And anticipation is a very good defense against this kind of thing. So if you anticipate these things are going to happen, you are less likely to be the weak hands. And an example of that flush out was with this red candle here that we got on Tuesday. Once we hit the 69,000, we had one of the biggest candles in the history of Bitcoin, which was around $10,000. And if we measure that from the top at 69,000 and from where it bounced from, you can see that was a near 15% correction. And if we go to the hourly chart, we'll see that this 15% correction, which should normally take at least a day or two, actually took 1, 2, 3, 4, 5 hours. So within 5 hours, we had a 15% correction. So this kind of volatility we need to be expecting and not get shaken out by panicking that the market has topped out. So this is the reason why we need to know that we have around about 9 to 12 months to go in order not to get shaken out along the way. And there's a lot of information to elicit from this red candle, because this really marks a short-term top. What I mean by that is that when you get a candle like this, quite a big solid candle as well as a wick at the bottom, it is what we call a tweezer top. It normally comes at the top of a trend, and the information to elicit from this is that it is a reversal candle. But with the amount of demand, as I've shown you with the ETFs, and the amount of interest that's being generated out there in the media, with the retailers coming into the market, instead of seeing this, I think what we're going to see over the next few days at least is a bit of consolidation sideways. And when I show you the 60-day cycle, that seems to be confirming this narrative. And if you look below here, you can see there's a divergence on the RSI. While we made a higher high here on the price, we made quite a flat lower low here. So it was just a slight gradient to the downside, but that is a divergence. And on the stochastic RSI, you can see it's firmly pointing to the downside. For those of you who are waiting on the sidelines, the levels to really look for is these levels here, that if we do go sideways, the support will be down here at the bottom of this wick. So we may well go sideways for a few days or even a week or two before we break out. There seems to be a low probability for this to fall much lower. And you can see that this red candle came with a lot of volume. So there are a lot of sellers at this point. They need to be digested out of the system. And if I was waiting on the sidelines, which I'm not, I'm fully invested with the Bitcoin miners. But if I was waiting on the sidelines, I would now wait for the break to the upside as a confirmation that the market is going to go higher. So this would be my entry point up here. A final word about strategy. A lot of people still ask me, what should we do? Have a portfolio, go into swing trades, etc., etc. My advice to myself would always be that when you have the start of a bull market, which we got, back around the 17,000 and the 15,000, that is the time to get in hard and get in early. And the reason for that is that to capture all of this move to the end of the bull market. That's the whole point of a long-term portfolio, to capture all of that move. And the challenge along that way is all the oscillation where you could get actually shaken out. So while you have to ride those out and poses a real challenge for those people who do not have patience as a virtue, but that is what's required. Nobody says it's easy. So we can take a leaf out of the previous cycles that those people who were fully invested at this point, at the breakout of the all-time high, they captured this move here, the whole of this move, for those with the patience. And in the second cycle, the ones who were able to be patient captured this move. And in the last cycle, for those with the patience, captured this move here. So the secret here is, and the advice I give to myself, I'm not a financial advisor. I can't tell anybody what to do, what to buy, what to sell. I can only tell myself that I should be fully invested at this point in order to capture the same types of moves as here, here, and here over the next 6 to 12 months. And finally, looking at the 60-day cycle for Bitcoin, we are currently on day 44. So that's where we are. As I mentioned earlier, this red candle looks like it's a topping out candle. So this may well be the top of this current 60-day cycle that we've got here. So we made the right translated cycle. That's very bullish. Without this candle, we would have expected a higher level because there was plenty of room for this to go. So what we've now got is plenty of room for this to go sideways or even lower. But as we've mentioned with the ETFs and the other demand that's coming into the market while the supply is falling, and if this candle is telling us that we're not going to go much further up, then the only alternative is to actually go sideways in a consolidation pattern. And as we've seen previously, we always have a little bit of a flush into the 60-day cycles. This one over here, and this one over here, and also this one over here. So let's wait and see what happens. So according to the 60-day cycle, we can expect now a period of consolidation rather than to push on for higher highs. If it does do that, despite this red big candle, the 15% fall, if it does actually go much higher, then we could be looking at quite a large increase towards the top end of the 70s. So only time will tell. Let's just observe it and keep an open mind and see what happens. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, then leave them in the comments below. And if you want to join us with the Bitcoin Miners Private Members Club, then you can click the join button below any of my videos. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.